Good morning, MMTs, and good morning to our other people around the world who rely on SMF as giving somewhat of a free guidance to you about where markets are, not how to trade them or invest in them. However, the MMTs who are present right now and other ones that will be viewing these videos that we're going to show about our trade management, but we're going to be showing a number of things here. We're going to be showing how Google is the bellwether of this bull run and how the Nasdaq Composite and the Nasdaq 100, which is related to Google because they trade on the same exchanges. One of the clear things that I'm going to point out, this is a Google chart right here, Google Inc. And once again, we've always told everyone over the last calendar years that Google would have to be the leader and get back to its price ranges where the financial crises were. That was over here in 2007. And we can clearly see that that's a 90-day breakout. So Google has trading patterns, and the broader Nasdaq Composite, which is this chart. This is the Nasdaq 100, which is the 100 stocks that are involved in this broader Nasdaq Composite monthly chart. Notice that the Nasdaq has rallied up to its all-time highs of the calendar year. One of the things that we measure the bull that we have in play was that this is the backbone of this Nasdaq 100 and Nasdaq Composite. Since we have rallied up for 3 months in a row, you can see the reasons why the Nasdaq 100 is at multi-year highs and Nasdaq Composite's at multi-year highs. Yes, there's lots of stocks that are involved, but I will tell you that Google is really the tracking system to the Nasdaq 100. And to get us into where we are at on the indexes, such as the Nasdaq Composite here, I will show this one in depth to you here, is that back right in here, we are coming up to where year 2000 on a monthly level is being challenged. And not only that, I would like to make it clear this particular area that I'm going to talk about, where this bull is going to come up here, and we're right at a major area where the year 2000 breakdown was, and we have managed to get back on the composite side up here. Now, we would have never got to these levels without Google participating and challenging its highs. And why could Google go higher? It can go a lot higher, and it can push that up there, the Nasdaq Composite, to higher bull levels. Back over in this level, I'm going to draw a trend line, and I'm going to put it right here. And I put it at 33.62, and it's the same one I've always talked about. We're right here at a major breakdown level. It's a monthly half bar. I'm going to delete it, and I'm going to throw it in there about half of that. And this is this big monthly down bar that occurred on 11/1 of 2000 calendar month. And this is going to be that major wall of resistance. Now, will this broader Nasdaq Composite break that resistance level? Absolutely. What would have to lead it the way is that if Google continues to break higher, then the broader market, the Nasdaq Composite, will break higher, because when this breaks higher, that will break higher. The Nasdaq 100, which I have right here, that's part of this whole thing. You can see where the Nasdaq 100 was back in these calendar years. And I'll just show you right here so it becomes very clear, is that when we're back over here in this year 2000, 2001 monthly bar on Nasdaq 100, when Google breaks higher, this will follow it. They all have a 4-month breakout. There is a strong correlation between the movements and how Google tracks and moves ahead. It controls the bull. We've always said it for a number of calendar years. And now that this thing is about to break its total bear trend, and we finally have gotten up to the 2007 peaks where Google had reversals, you can clearly see that this breakout here These are going to be the resistance areas that we're going to focus on. It's going to be calendar 2000 and 2001. And Google has provided the Nasdaq Composite to be able to be part. Google is a leader. And because of its leadership, as it broke out 4 months, Nasdaq Composite followed it. Yes, a lot of broader equities did also track it, but this is the leader. Google is the leader. So when Google pulls back, we'll have problems over here. I'm showing it on a monthly view because Google is going to report its calendar earnings. And I will be doing a separate video on Google reporting earnings. And Google is overbought on a monthly level. The Nasdaq Composite's overbought. They all are. The focus for people to understand is that it took the bellwether to get back to these 2007 highs. Google would always lead the way because when Google collapsed all of those different years, it's gotten back up here. And I can tell you what, the same breakout here, it's a tracking. I've got Google right there. There's a Nasdaq Composite. You can clearly see the same breakout level here on the Nasdaq 100. So when we get into the calendar earnings on Google, Google's going to trade a certain way. And I will do that in a different video, meaning that Google will either trade up to calendar highs, it'll pull back, but at each top that we get to, we're going to hit the wall of resistance levels on the way up. Now, Google could trade down to the $700 support level right here before they report earnings, or they continue to run that higher into the earnings. There will be a trade based on this earnings report, and it's going to be 10 days prior to Google's release date of those actual earnings. And those are 5-day trading periods. So basically, we're at the wall of resistances. Google breaks higher, this bull goes higher. Period. And any pullback in Apple's, Google's price lines, or any of the bellwethers and the bull cycle, even though that the calendar earnings are going to be challenging for these companies, I will tell you though that the broader people in the last 4-month rally in the Nasdaq 100 and the Nasdaq 4-month rally have sat on the sidelines, and the majority of people have underperformed this bull market run. They've underperformed being here. They've underperformed being here. That means that any headwinds that may hit the market and any great pullbacks by the dips, because people who did not participate in these rallies from the summer, and today is 9/22 of 2012, and we are officially right now into fall, and the earnings season is going to start within a couple of weeks, and each individual name will trade up. The transports told us a story that internet hasn't told us yet, and they're missing earnings. It doesn't matter. What this means is that this bellwether pulls back, hits support, and keeps making higher highs up to the 775 area, which in our platform it could easily do. That means that this particular bull run that is finally, and it took all these years to happen in 3 months on Google. It took all of these calendar years from 2009 to work off that big selling that happened in the financial crisis right here when we sold short Google. That thing got down here to $250. That was the best price to buy it. We were there in every calendar year. But look at all of those years. 1, 2, 3, 4 years later, but it does it all in 3 months is what I'm getting at. And that Google is a major driver of how the internet has revolved, along with many other companies as well. However, this is the leader. It's been public since we were trading it over here in 2004. And we can clearly see that we've been around here now for 8 years in Google on a monthly level and yearly level. And that it became part of the broader Nasdaq Composite. As far as what directions and how far bull rallies or bear moves would be. When this stock broke its bear trend from its big bear reversal and got set up here in 2010, it had already broke the bear trend over here at this level in this calendar year right here. It was halfway to the distance. It was a consolidation. As it moved laterally up, it really started to gain traction. Yes, Google will have pullbacks, and they do, and they will. And every time it gets overbought, of course, these times were different, but I'm letting you know that moving forward, we will be focusing on this, because if this name will continue to go higher, it would trade between now and its earnings season. If they keep running it all the way up, all the good news is priced in. Listen, I will be doing separate videos. I wanted to compare with my MMTs the Nasdaq 100 right here. Here is, and they're all 4-month rallies, and I'll throw the Google in here again in the same video. Same 4-month rally, 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 and rally, and Google is the leader of the bull. Because if Google is doing well, then the broader market goes with it. It's been that way for a number of years. Don't ask me why. Apple has come into play now where it's playing a significant role like Google does. However, when Google has these, it took it 3 months. And right now, if we break higher here, the broader indexes are going to break higher. But just let me give caution to everyone. This is a comparison analysis of how Google is the major bull of the Nasdaq Composite and the Nasdaq 100, and the comparison of the monthly breakouts. Now, when we get into the earnings season, that's going to be a different story. But we will tell you in our other analysis to our other MMTs, specifically that because of the underperformance and the massive liquidity injections, that even though that there could be some price volatility to the downside in the earnings, that people are going to buy those dips. And I can tell you what, we're going to be monitoring it, because if Google was to fail and have a big reversal and not come back, I guarantee you that these broader index will follow it. They don't always happen with each other immediately, but they're always forward looking. And it's a comparative analysis. This is a very special update. I can tell you that all three of these, if this is overbought, which it is on a weekly and a monthly, it's in overbought territories. And so is the Nasdaq Composite, and so is the Nasdaq 100. Once again, we are going to be ramping up on how to trade Google going into its October earnings. And we will be covering it right up to the closing bell. And after hours is going to be the grand finale trade. It's going to trade and consolidate these bull runs, just as these markets over here are going to do. But when we get through the month of September, we're now into the fall. We're short-term, overbought, and extended. That means that any upside prices in Google will have price volatility reversals. So will the broader Nasdaq Composite. As we move up through these monthly resistance levels in this bull, they will start to have price volatility. What will cause it will be headlines, it will be earnings. The thing that can keep this bull rally moving is people chasing performance in the Nasdaq and the Nasdaq 100. However, earnings season is coming upon us, and it all happened in a calendar summer period of 2012, where we took out major resistance levels. Rather, they're high frequency computing cycle buy and sell scripts that go on in exchanges. That's a whole different thing. So once again, MMTs, we can clearly see that the bellwether has returned home. And we're at the all-time greatest highs, and that the Nasdaq Composite, Nasdaq 100, and S&P and the Dow really would never ever get back to their multi-year highs without Google being the primary focus. It had to make those highs for these broader exchanges as the Nasdaq Composite and Nasdaq 100 to reach their calendar yearly highs. And this is the bellwether that marched it along the way. Earnings season is coming upon us. We're overbought. New analysis will come in. It won't all be done on this video. But the comparison as to going into the fall season and the earnings season at year end on all of these bull trends that are heavily in bull cycle are overbought, and price volatility to the reversal side, when they hit those support levels, they will bounce. As far as the bull analysis go. Headlines are going to be different. Media is going to be different. All the publications around the world and all the heartaches and the problems, they remain in their own component. But we will compare it. When this breaks higher, we're breaking higher here, and we're breaking higher here. If they miss the earnings and they come down, dips will be bought on Google. That bull is as strong as it's been in a number of years. People are on the sideline. They will buy the dips in these exchanges until something proves them otherwise. Right now, it's all about the bull side of where it's ran its course. And we've seen before where they can come up, but everything will have a pullback at some point. And it will be based on this fall trade. It will be based on the earnings.